Today was the most important day for stocks that we're going to see for the next at least 3 months. What we got from Fed Jerome Powell, well, he basically confirmed put your money back into stocks. And that is what looks like happened today. Russell 2000 soared over 3%, as I expected it would. Now, I went out on a limb to share my opinions, and hopefully you profited from that. Maybe, if not, that's okay. You're going to have plenty of other chances to profit from that. But congratulations to everyone in the trading community that did take advantage of that. Tesla, up almost 1% today. I think this is just the start of something much larger to come, like much larger to come. Here in this video, we're going to talk about just that, the significance of the day today, what I expect to happen with Tesla stock, where I expect Tesla stock is going next, some of the next biggest catalysts we will have for Tesla, and how after today, you might see Tesla react a lot more aggressively to good news and move higher to the upside once that good news does come out. Because after all, it looks like we don't have to worry about the Fed raising rates anymore. We might be worried about or watching potentially even more rate cuts than what the Fed just told us today throughout the course of 2024. So we're going to get into all of that. If that did not make sense, we will clarify it here in this video, break it down in an easy, concise way to understand for each and every single one of you, regardless of skill level or experience. Hit that like button and subscribe to the channel if you guys like videos like these ones, and consider sticking around a while if this is your first time to the channel. Nonetheless, let's just go ahead and jump into it. Tesla stock was up about 1% today, but this is just the start of a multi-month trend, where you're going to see trillions, with a T, trillions of dollars come into stocks. Your interest rate sensitive names specifically. This trillions of dollars, or these trillions of dollars heading back into interest rate sensitive names, a good chunk of that might make its way into Tesla, because Tesla is just unrivaled in the degree of safety, the degree of interest rate sensitivity, and the degree of growth. I mean, name me another stock that has higher growth potential, with a higher degree of safety, with a higher degree of interest rate sensitivity. There's not a single one out there. So Tesla fits that bill perfectly. Now, Tesla did get some bad news today with the recalls. I think that really gets misconstrued by a lot of investors. I think a lot of unsophisticated investors hear recall and they don't even look into it. They just sell stock. They see 2 million recalls for basically autopilot that's going to be fixed with an over-the-air update. They don't even get to the over-the-air update part. They just sell Tesla stock. So that is what caused a little bit of that downside negative bias in the beginning of the day today. And there was a good chunk of that. At one point, Tesla stock was down about 2.5%, falling all the way into the mid 220s, right? Down to about 227, 228. And then Tesla bottomed, found a lot of demand in this range, went all the way back up to the 50-day moving average before the Fed, and now closed just under about $240 per share. But this 1% move, like I said, is just the start. Let's discuss a little bit of what the Fed said today and what the Fed did today. So this is the summary of economic projections, basically a forecast from all of the Fed members, voters and non-voters, on where they think different data points are going to be by the end of 2024. The most important thing, and the reason why stocks did very well following Powell, was the federal funds rate projections. So these are projections for the end of 2024. September, the Fed was expecting 5.1% for the Fed funds rate by the end of 2024. That was implying one rate cut. Now the Fed said 4.6% is where we think Fed funds rates will be. That's implying 3 rate cuts. That's very bullish. Because why? Change in GDP was very minimal, from 1.5% down to 1.4%. So the Fed's expecting a slight bit more weakness. The Fed's expecting the unemployment rate to stay the same. There is no change there at 4.1% in September and 4.1% here today. Inflation, PCE inflation, their estimates for core have fallen from 2.6% to 2.4%. And PCE headline inflation, their estimates have fallen from 2.5% down to 2.4%. So across the board, this was the best possible outcome. Now, sure, we could have argued that maybe 4 rate cuts could be better than 3, right? That could have been a better possible outcome. But the fact that the Fed finally confirmed in writing that they're planning on doing multiple rate cuts, getting more so in line with the markets, pretty good news today. Now, I think partly why indexes like IWM, like your Russell 2000, did so well today, up over 3%, did astronomically well today, is because when the Fed starts cutting rates or forecasts to cut rates 3 times, a lot of the time the Fed is wrong. So the way the markets are kind of looking at this is, at bare minimum, the Fed's going to cut rates 3 times. But they could cut rates 5 times or 6 times, maybe even more than that, just depending on how data comes out, how the economy does evolve. You could see this pretty obviously with the 10-year Treasury. 10-year Treasury yields, get this, dropped 19 basis points today. Even though the Fed is expecting 3 rate cuts and the markets are expecting 4 rate cuts, you still drop 19 basis points with the 10-year Treasury. This is drastically, or maybe I should say in a drastic fashion, going to pull capital from bonds, from money markets, from cash on the sidelines, and bring that back into stocks. Some of the things Powell said on during the press conference itself also was just very bullish. So I shared a couple of these to the X account. Go ahead and follow it. It is Michael Tyler on X. Now, he says, we are aware of the risk that we could hang on too long to rates. We're very focused on not making that mistake. He was asked directly, what's the odds basically? How are you going to avoid, maybe is the best way to put it. How are you going to avoid staying higher for longer for too long? Because the Fed was obviously way too late to start raising rates. And what are the odds that they're too late to cut rates? And Powell basically made it clear we're going to watch things closely and they're not going to make that mistake again. And I think that's another very powerful statement that Powell did use. He says, we haven't worked out if we will follow a threshold-based path for cutting rates. Like if we get inflation down to this, then it's okay to cut rates. That's never how it works, but still. Powell says we've seen reasonable progress in non-housing services inflation. So Powell was really talking up the progress that we have seen on inflation recently. He also says, I believe some policymakers did update their forecast based on data from today, based on the PPI that came out today, and based on CPI yesterday. Now, we are also going to get some data coming out tomorrow that is going to be very important. And we'll look at those estimates as well here in this video. Powell says you need to reduce restriction on the economy well before 2%, which is in line with what we all know, right? You don't keep Fed funds rates at 5.5% until inflation gets all the way down to 2%. Headline inflation's at 3.1%. It's pretty justifiable why the Fed should be cutting rates right now, but Powell just basically confirmed that again. Powell says, we think the supply side help for inflation has some ways to run. Powell says we are not talking about altering the pace of QT. That's actually pretty important as well, because if there was really some kind of crisis going on, if the economy was really going to weaken into the state of recession, then QT would probably get cut pretty quickly. They would stop running off the balance sheet or maybe lower that even more than where it's at right now. Option activity today in Tesla stock was also very impressive on a nominal basis. You had about 1,200 different trades from hedge funds and institutions, totaling $3.9 billion with a positive order value of 33%. If you look at the volume here, you had 55.14% volume to the call side, 44.86% volume to the put side. So it looks like the bulls won out the volume, but maybe as far as the dollar amount itself, the bears did win a little bit of that. And I do think there was quite a bit amount of fear before the Fed. And given this recall news, like we said, Tesla was down 2.5% before the Fed. So coming tomorrow, and over the next coming days. That's where it'll be a little bit more important to see how Tesla does react. Now, we are expecting some catalysts here in the near-term future as well. At least I am. One of those being FSD entering into the Chinese market. Now, when that happens, I mean, that's going to be huge. Rumors have it that that is coming to China this month. It is December 13th. That could happen anytime now. And I think in this market environment that we are now in, it's likely that good news becomes really good news, because as rates start to fall, investors really want to look for places to put their money. I don't really think there's any better place to put your money that fits the three criterias that we talked about earlier in this video. With that being said, short sellers are in a really bad spot considering you're at some of the highest numbers of shares currently sold short. The amount of shares sold short is about 89 million. Last we knew the actual legal amount on the official short interest report from FINRA and the SEC was about 93 million shares sold short. So it's anywhere between 89 million and the low 90 million range. Maybe the high 90s, who knows, ultimately, until we get the next official report. But the dollar amount that's currently sold short is $21.07 billion. 3.27% of the float is sold short right now. And I do think this is a really bad time to be short in Tesla. I mean, that's just the obvious here. As money does start to flow back into our markets, I think it's clear the next coming months likely to be pretty good for stocks, and especially good for Tesla. Now, we do have some data coming out tomorrow that is important. We have retail sales month over month for the month of November. You're expecting negative 0.1% on a month over month basis. Export prices month over month are expected at negative 1%. Import prices expected at negative 0.8%. This is a chunk of GDP data that we will get reported on tomorrow. Now, faster the economy starts to fall into recession, the more rate cuts we're going to price in, but ultimately that's bad news. So you want to see it come in probably in line with estimates, but not super bad at the same time. Rate cuts are only good news if you actually see the economy holding up. If that's your soft landing. If you get a lot more rate cuts because the economy is going down the toilets into a recession, that's just bad news. That's the simple fact of the matter. So tomorrow's data will be important. You're also going to get the ECB press conference. I'm sure it's probably going to be in line with kind of what we've seen today. Markets around the world, or feds around the world, tend to like to stay pretty aligned with the US. We've already seen a lot of feds globally starting to cut rates, and now we are getting closer to that. Now, tomorrow night, you're going to get industrial production, retail sales, and fixed asset investment. House price index year over year as well coming out for China. Could be important. Maybe not. We'll have to wait and see. At 10 o'clock in the morning tomorrow, business inventories month over month. You're expecting that at 0%. That's another component of the GDP as well. So a couple different things to obviously be watching. Retail sales year over year are expected at 2.1%. So just remember this narrative going ahead. You want to see the data slightly weak, but not too weak that we're heading into some kind of recession. Recession is bad. Recession is no bueno. But slightly weak economic data, that could be seen as a good thing to get more rate cuts. Now, as we are currently making this video, there is about $6.2 trillion in money market funds currently. There's probably an equivalent amount in cash on the sidelines, and probably 10 or 15 trillion in combined, money that's in bond markets that could prospectively move over to stocks. So a massive amount of capital. This is one of the most underweighted times for hedge funds and institutions in stocks, meaning that a lot of hedge funds and institutions prefer bonds right now, and they prefer credit, not stocks. And now that at least we can look forward to multiple rate cuts in 2024 with the odds of a soft landing very high, it looks very attractive to put money back into stocks. Now, money market funds at 6.2 trillion. This is very liquid money. Bonds, a little bit less liquid. Cash, very liquid. So I just use this as a frame of reference. Now, another frame of reference for you is the amount of money in the Russell 2000. So just to kind of show you how significant $6 trillion in money market funds could be if it went into stocks, the total market cap of the Russell 2000 is $2.23 trillion. So, I mean, your $6 trillion in money market funds could 5x the Russell, right? Triple the notional value that is the Russell 2000 market cap. Just a chunk of that, or a sliver of that $6 trillion heading back into stocks, could have huge effects for our broad markets. Okay, so if you can't tell so far, I do think Tesla stock is going much higher from here. This is the confirmation that I have been waiting for. Now, take a look at IWM today, the Russell 2000. Congratulations to everyone that hit this trade on the head with us. Everyone that, takes in my outrageous opinions sometimes, because it was 100% correct this time. Most of the time we're somewhat correct. Sometimes we're just outright not correct. But this time, so far, so good. IWM up 3.51%. Here in after hours, up 0.20%. This is a rally that likely continues for a while. Obviously, there's going to be ups and downs, but I do think it's going to be more aggressive than some of the rallies that we have seen before. With that being said, Tesla stock is likely to participate as an interest rate sensitive, high growth, high capital intensive business that Tesla does have. And considering Tesla's down 45% from all-time highs, we get rate cuts in 2024, it's not hard to line two and two up and say Tesla might be able to raise prices. At the very least, Tesla's business will probably stay intact, and Tesla's margins should get better from here. It's not rocket science, okay? We're just early. We're just early to the punch. We're before Wall Street, right? So I do think Tesla stock goes higher from here. It was encouraging you found support at the 50-day moving average. Even though Tesla stock was down 2.5%, fell all the way to $228 per share, you did get above the 50-day moving average before Fed Jerome Powell did speak. You found a little resistance at 240, and considering we had that bad news today with the autopilot recall, really just an over-the-air software update. I don't know why it's even called a recall at this point. You did see a little bit of a damper on Tesla. You probably would have seen Tesla up 2 to 5% if otherwise that did not happen. Now, important levels to the upside, 100-day moving average at $242.17 per share. If you get above that, then you break into the 250s. Oh boy, you break into the 260s and you're going into the 300s. That's ultimately my expectation. I mean, if you just look at July, people were comfortable buying Tesla up to $300 per share solely based on AI hopium. Not rate cuts, not the prospect of Tesla's business getting better. Just wait until FSD enters into China. Now, I have no specific timeline on when this will actually happen. Tesla could hit 300 this month. If, I know that's a strong statement, if FSD does enter into China. Markets might say, wow, that's great news. On top of rates going lower, Tesla's margins are going to improve. The business is going to improve, right? You get the idea. The narrative is shifting. The way people are investing their capital is shifting, and it will continue to shift. And money will continue to flow out of bonds, out of fixed income, into stocks, as long as it looks like we're not heading into a recession. The second it looks like we're heading into a recession, money will flow into bonds again, money, more than stocks, I should say, and money will flow into credit instruments and other means of protection. But until then, I think Tesla stock's going dramatically higher from here. And I think by the start of 2024, if not the beginning of 2024, we're going to be over $300 per share. I think it's kind of hard to make a trade based on that, especially in the land of options, just because Tesla options are expensive. So you need to see a dramatic move higher pretty quickly. I don't know how it's ultimately going to play out, but I do think a month from now, Tesla stock could be $300+ per share. I don't think that's too unrealistic considering how Tesla can move. Tesla can move up or down $100 like nobody's business. And I think the next $100 is to the upside. Let me know what you guys think down below in the comment section. But if you're looking at other indicators as well, some of your relative strength indicators like your RSI at 53, Tesla stock's basically neutral. It has a lot of room to make an upside move. The MACD is pretty neutral as well. So all of these things suggest to me that Tesla stock, well, it's a new time for Tesla. Let me know what you guys think down below in the comment section. If you guys want to come join the trading community, link down below in the description of this video. In the meantime, hit the like button as well as subscribe to the channel. Help push this video out to as many people as possible. Thank you for watching. Enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.